Hello, good morning, ladies and gentlemen. It's Happy Friday, and I'm so excited to welcome you to another promising session as we are going to be taking a technical dissection of the current market structure in anticipation of the London and New York session today. It has been well, I'd say, an imbalanced 24 hours as we had some choppy situations most of the time, and not until the early hours of today we begin to see some traction in favor of the US dollar. And on the US oil, we have been seeing some choppy situations too as well. So all this we are going to be looking at during the live session today. And as usual, you all know what we look out for before we get started. We want to take a fundamental look at the economic calendar to see what everyone in the market is looking forward to today. And you all know we have how many pairs? We have four pairs we have been monitoring since the beginning of the week, and we want to be looking at economic calendars that will be affecting either of this pair, either of these instruments in this pairs, like the US dollar, the Japanese yen, and the pound sterling. And when we look at the economic calendar, we only have one high impact macroeconomic event coming up today, and that is coming in from the UK docket, and that is the S&P publication, which is the CIPS services. So this is an indicator of the economic situation in the UK services sector. So this is one event majority will also want to be looking forward to today to give a clue into what to expect, especially on the GBPUSD that we have been monitoring since the beginning of the week. Then aside this one, we really do not have any other high impact event. And then before we kickstart the live session, I would also want to state here that today being the last trading day of the week, there is always this psychological preference that happens on the last trading day of the week, as majority of the market participants will want to be doing some profit taking activities as we head into the weekend, as we don't know what will happen on Monday. We don't know what is going to happen during the course of the weekend before the Monday session. So majority will want to be closing out most of their position, and this will probably reflect on the chart as price action moving in the opposite direction of where it has been going since the beginning of the week. So we are going to be taking all this into consideration as we review the current market structure. And please, I would like you to confirm if you can hear me so that I know that we are still good on this one. So if the audio quality is good, the visuals are right, let me know in the comment section. So with that being said here, let's dive right into the business for today. So as usual, the first commodity we always look at is the US oil, and in fact it has been a very profitable week for us on the US oil, as we had continued to sell the US oil throughout the course of the week. And as a result of this, we have this whole descending channel which has captured the nature of price actions movement since the beginning of the week. So we have been selling actually, and we rode the move all the way to the downside, as you can see here. However, since the later part of the New York session yesterday, we have been seeing some buy pressure resume around the $77 level, which is probably going to be a sign that majority who had a position at the beginning of the week would at one point want to be doing some profit taking activity, as the US oil might be a little bit cheap for some people to start buying that commodity. So we are going to be looking at this from a technical standpoint to decipher if we really are going to be getting ready to buy, or we want to continue to sell the US oil for today. And for those who have been on this journey since the beginning of the week, congrats to you, kudos to you guys for being on standby to be able to catch this opportunity. And if you still have a sell position running right now, as we had some couple of positions opened during the New York session yesterday, I think we had one had the $78 level here, which we took advantage of, and we also had one at the $77.50 area. And at this point, I will be advising that you move your stop loss, lock in some profit here, and let's see how price action is going to play out from this current point. So above the $77.50 area seems most appropriate to lock in some profits at this point, as if price action breaks out of that structure, there is a high chance that price action will continue to the upside at this point. So with that being said, okay, Amin, thank you very, very much for that confirmation. I really appreciate that and trust you are doing well this morning. All right, so now that we are going into the trading session today, what is going to be our plan? So our center of focus today will be between the $77.50 level, which happens to be the resistant line in the last 12, 14, 15 hours thereabout, as you can see here. So we have the $77.50 level, and we also have the $77 area. At this point, the first thing I would like to say here is have a sell stop order below the $77 area, as we already have cited the breakdown of that structure, which is a sign that sellers are still making a statement in this current market structure. So let's have a sell stop order below the $77 right away. We already have a breakdown. We have price action come into structure to do some retest, and if the sell pressure continues below the $77.50 level, there is a high chance that price action is going to be slicing through that $77 max. So we should be having a sell stop order below that structure so that we can capture that move when it finally happens. So with that being said, let's look at other possibilities that could happen in this market. So the first thing I would like to do at this point is to extend the support line of this descending channel, as you can see here. So I will extend it out a little bit so that it can capture the movement of price action in the next couple of hours. So right now, what I'm looking at here after placing a sell stop order below the $77 level is to see how price action will be reacting to the $77.50 area at this particular point in time. So we are not going to be having any sell position around this area. Even if we start seeing selling pressure, we want the sell position to be below the $77 level. And the reason why I have said this is simply because of the buy pressure we have been noticing around this area since the New York session yesterday. As you can see, sellers were finding it difficult to break down that structure, as we have seen how buyers at multiple times rejected all attempt by the sellers to break down that structure. And it could so happen that the breakdown we saw here a couple of hours ago could turn out to be a false breakdown. So that is why I'm suggesting that we shouldn't be selling around this area, despite the fact that it shares a confluence with that support line of that descending channel. So right now, what we are going to be doing is to see how price action reacts to the structure. So for me, at this particular point in time, if we begin to see a situation here where price action breaks out of that $77.50 level, climbs above the support line of that descending channel, we might likely be seeing the beginning of a reversal pattern. And if this happens, remember, we are not jumping right into this current structure to buy. Remember, we are on a descending channel for throughout the week. We are on bearish momentum, so it's not reasonable for us to jump right into a position that is actually against the trend. So we still need some confirmation to give us that confidence and leverage to be part of a potential move to the upside. So for us to look out for patterns that will give us that confirmation, we want to see how price action will react above that breakout of structure. So in order to be able to see this, we will scale down to a much more lower time frame. It could be your 5 minutes time frame, 10 or 15 minutes time frame. We want to see price action do a retest of that structure. And as soon as a retest of structure happens, most importantly, we want to be seeing some buy pressure resume above that structure, giving us signs that sellers are finding it difficult to break down that $77.50 level. That at this point, we are beginning to see a gradual rise in momentum for the buyers, and at that point it will be reasonable to look out for buying opportunity. And if a further breakout of the $78 level happens, sorry about that, it's $78 level, if a breakout of that structure happens, we want to be adding more position to our existing trade. So we shall continue to add more position if price action continues to the upside. And I want to extend the resistant line of that descending channel here, as it's going to also be a very important structure that we shall be monitoring during the trading session today. So as soon as price gets into that level too as well, we want to be moving our stop loss accordingly, lock in some profit, wait out to see how price action will be reacting to this confluence here at the $78 level and the resistant line to decide if we are going to be adding more position to our existing trade or getting ready to start another bearish tone to the downside. So these are the little structures we are going to be seeing today. It's very simple setup. There's nothing complicated about this one here. So let's remain patient and continue to monitor this price action. And for those who are already in a sell position in the last 24 hours, I've told you guys, move your stop loss, lock in some profit at this point as we continue to monitor price action. So let's see how things plays out from this current point, and I will definitely be with you in the comment section on my public platform to give you updates on what I think will happen if anything strange comes up at any point in time. So that is my view here on the US oil. A very simple setup we have there. If you have any questions, let me know in the comment section, and I'm willing to be of help in that regard. So that is that on that one. So we shall be moving on to the next instrument for today, which is the GBPUSD. So on the GBPUSD, we are right on the 1 hour time frame, and we currently have a sell position running right now as we took advantage of some couple of positions at the during the early hours of today. So let's quickly run through how these had gone by since the beginning of the week. So the week actually started on a bearish note, as you would remember that we had this resistant line figured at the 1.24200 level, and price action had continued to reject that area to give us a clue into the strong presence of the sellers at that particular point in time. We saw price action drop back into the 1.23840 level where we started seeing buy pressure. So this gave us a flat channel where price was trapped within for quite a while before we finally saw the breakdown of that support line, which was a sign that we might be going bearish. And during our live session on Monday, we were at the situation here where I said if price action breaks down that 1.2400 level, we are going to be looking out for selling opportunities. And remember, at the beginning of the week, we had the 1.2400 level as our key level for the week, as we all said that if price action trades below the structure, we look out for selling opportunity, for buying opportunity rather. And if price action stays above that level, we are going to be looking out for buying opportunity. So in fact, it was our yardstick for trading activity at the beginning of the week. So because of the breakdown of the structure here, we joined a 50 pips move to the downside before this bullish momentum began on Tuesday. And since then, we saw how price action had consistently found higher highs and higher lows. And as a result of this, we connected the series of higher lows here, which gave us this resultant bullish trend line, which has actually been our guide since the beginning of the week. Then there is one thing we also acknowledged on Tuesday, and that was the impulsive move that started last week Friday. As you can see here, we saw that impulse leg started at around the 1.2550 right into the 1.23500 level. And what we thought on Tuesday was the fact that this bullish momentum we are seeing here could actually turn out to be a retracement of that impulse leg, where continued selling pressure at our golden zone area would incite a trend continuation to the downside. And with the look of things right here, we saw, to help us guide our trading activity, we used our Fibonacci retracement tool, run it through the previous impulse leg here, and what we saw, we aim at an area between the 50 and the 78.6% of that impulse leg as our golden zone area, and that area also is going to be serving as our sell window, where the appearance of selling pressure around this level will be giving us an opportunity to join the direction of the proud leading price action, which is actually bearish at this point. So, and you can see what happened here. Yes, on Wednesday, throughout Wednesday's trading session, we saw our selling pressure resume just exactly around that sell window we identified on Tuesday, and this was a sign that sellers are gradually gaining some momentum in this market. But I said something yesterday that we are not going to be joining a bearish momentum at that point, as we are going to be using this bullish trend line here as our yardstick to join a bearish move. And the only way we are going to be joining a bearish move, the only thing we want to see on this chart that will give us a sign that bearish momentum is gradually coming in, is a breakdown retest of that bullish trend line. So if we do have a breakdown of that trend line, then it will be a signal that the trend line may no longer have the capacity to continue to hold that bullish momentum. And with a sell stop order below the 1.24420 level, which also shares a confluence with that trend line, we had a sell stop order around that area. We had a sell position triggered this morning, and for those who took advantage of this opportunity, well done and kudos to you, as you will currently be at least in a minimum of 48 pips in profit if you only had one position. Remember, we also had a structure here at the 1.242 level, where we said a breakdown of that structure too as well will be welcoming some selling opportunity as well. And if you are taking that one too as well, you will be with about 22 pips in profit at this point. So well done to everyone who had been part of this profitable journey, as the next thing we want to be doing as usual is to secure this current position by moving our stop loss accordingly. And at this particular point in time, and with the nature of this current structure, it is quite appropriate that we move our stop loss to the previous structure, which is right above the 1.2420 level, which happens to be the second entry in this particular market. So let's have our stop loss around that area. We want to give price action some room to breathe, which will be dovetailing to about 20 pips thereabout, which is not bad at all. Let's see how things plays out, and if this happens, we want to be part of another wave of bearish momentum to the downside. So move your stop loss accordingly. Let's lock in some profit here, and let's see how price action will play out today. Now, for those who had missed out on this opportunity, it's okay. I still think the market will still be presenting some trading opportunity, and if you consider what I said earlier as regards the last trading days of the week or the month, we normally see price action move in the opposite direction, as majority want to be doing some profit taking activity, which would reflect on the chart as price action doing a reversal. And look at what has been happening since the beginning of the week. We can see how price action has been bullish, and how the 1.24700 level here has been a very strong selling niche, negating all attempt by the buyers to break out of that structure. And with the look of things right now, I'm of the opinion that we might be having a very massive bearish move to the downside. And considering the fact that we have a high impact economic event coming up in just 2 minutes from now, and that is the S&P Global CIPS service, which we deliberated on earlier, there is a likelihood that we could have some sharp movement anytime soon that could trigger some shakeouts in this market. So it's very important that we move our stop loss, lock in some profit at this point, and let's see how price action will be reacting to the 1.240 level. For me personally, having a sell stop order below the 1.240 level, an area I'm looking forward to more selling opportunities to rather move all the way to the downside. And if you look at the importance of that 1.24, if you had watched my video during the course of last week's during the course of the weekend, where I normally share with you an holistic point of view on what I expect to happen on the instruments on our watch list, you will see how important I emphasize the 1.240 level. And look at this week, actually you can see how that level has also played a major role in determining price action at this point. So we saw a breakout of that level here on Tuesday. On Wednesday, it was serving as a very strong buying niche, and we saw what happened here also yesterday. And at today, as you can see, we're beginning to see some little choppy situation going on around that area. And if you do have a sell stop order below the 1.240 level, you would have had your sell position triggered, and you can see what is happening right now. We begin to see some sharp movement in price action. So have your stop loss anywhere around close to this area, about 1.24380, which is about 35 pips thereabout. Let's give room for price action to breathe around this point, and let's see what will happen. Then another thing about this whole structure is that there is still a chance that we could have a retest of the structure also happen. Remember, the structure was broken to the downside, and from a technical standpoint, there is a high chance that price could still come back, do a retest of the structure, selling pressure below the structure on our lower time frame, could incite another move to the downside. So let's keep this in mind. Let's give room for price action to breathe, and I hope and I think price action will still be going bearish in this market. And like I told you yesterday, the only thing that will make me think of buying the GBPUSD is if price action breaks out of that 1.24700 level, which is quite a lot of distance from this current market structure here, which is about, let's see, that about 60 pips thereabout, which is quite massive. So the only thing I'll be looking out for to buy is for price action to do some huge move, probably into the structure breakout. Then I look out for a retest where price action respects this trend line for me to join that trend continuation to the upside. So that's the only thing I'm looking at here to buy the GBPUSD, but I doubt if this happens. But if it does happen, we want to be on standby to catch that move. So that is that on the GBPUSD for today. If you have any questions, let me know right in the comment section. And I can see a comment from Hami. US oil news 0705 GMT. Oil prices are set for their first decline in a week since March, as refinery margins are flashing warning signals about the health of the global economy. What is your view on this? Well, I just told you my view on this. My view on this is always technical, so I always try to look at the chart to see what is really happening in the market. The news is as a result of what is happening in the market, and whatever is happening on your chart is just a clue into what people in that market are actually thinking. So if you see a consolidation phase in the market, it tells you that people in the market are very, very indecisive of what to do. And your only signal to trade when you have the consolidation phase is to look out for a breakout of structure, which will give you a signal of where price action will be going. So one thing about fundamental is that I only look at fundamentals to be able to position myself ahead of that big move that will be happening. So I really don't watch news to make my move. I make my move based on the chart. So let me reiterate this. The chart tells you what is going on, and what you see on the news is as a result of what is happening on the chart. So let's keep this in mind. Let's focus on the chart. The chart will tell us what is really going on in the market. The chart gives us the psychology of the majority of the participants in the market. It gives us a sentiment. It gives us what is they're thinking. It gives us it illustrates the emotions of fear, the emotions of greed, the emotions of hope. All this you can see on the chart if you read the chart very well. I hope I've made myself clear on that, So the charts will definitely give you what is really going on in the market. So we have talked about the US oil, and we have thought of what is really going to happen on the chart, as there is a likelihood of a reversal pattern happening. And I told you we could have a sell stop order below that structure. Let's look at the chart one more time. I told you that we could have a sell stop order below the $77 level to join a trend continuation to the downside. And if it so happens that price action breaks out of the $77.50 level, we are going to be getting ready to be part of a counter trend opportunity. So this is what we are looking at. What is happening here is real time. The news is only telling you what has already happened. I hope I made myself clear. Let me know in the comment section if you still need more clarity into this. So moving on right now, I'm going to be going into the next commodity, which is the XAUUSD. Now on the XAUUSD, we've had a couple of sell positions since the beginning of the week, as price action has been tending towards a bearish momentum since the beginning of the week. And this is very, very evident after we connected the series of lower highs in this market since Monday. As you can see here, price has consistently found lower highs until yesterday, when we saw the breakout of this trend line here to incite a potential move to the upside. But as you can see here, the bullish momentum wasn't that strong. Remember, during the course of the New York session yesterday, we actually had a buy position above that $2,000 mark. And the reason we actually bought at that point, remember I told us all at the beginning of the week that the $2,000 level is going to be our yardstick for the week. And in fact, that level also was a major determinant for price action prior to the beginning of the week. If you had watched my video on the XAUUSD, you will see how important I laid emphasis on this current structure. And at the beginning of the week, we agreed that if price action trades above the $2,000 mark, we look out for buying opportunity, and if price action trades below that structure, we look out for selling opportunity. So though we had a buy position here during the New York session yesterday, but the momentum wasn't that strong, and I think during the later part of the New York session yesterday, I had to close this position. As you can see, buyers were struggling to go up to break out of that $2,007 mark level. And if we go to as far back as the beginning of this week, you will see how that level has been a major selling niche in this market. Look at what happened here. Look at what happened on Tuesday, and look at what happened on Monday. Though we had the breakout of that structure, but it didn't last long before we saw price action drop back below that level. And this is a sign for us that sellers are very, very strong in this market. So at this point, I had to close my position. And I think I shared an update in that regard, that as soon as price had moved, we want to secure all our buy position. And with a sell stop order below the $2,000 mark here, we had our third sell position for the week triggered at that point. And if you are taking advantage of that move, well done to you for being on standby to have caught that move, as you will currently be running with about 150 pips in profit. So well done to you for being on standby to catch that move. Then remember also, we also had a sell stop order below the 1992, which was also another opportunity for us to add more position to our existing trade. Then we also have another one here at the 1987, where price action is right back below that trend line. So at this point in time, with a sell position running right now, what we want to be doing here is to secure our sell position by moving our stop loss accordingly. And at this particular point in time, I will be advising us to move all our stop losses on all the sell positions to anywhere just right above the 1992. It's a very important confluence we have there, where the trend line that has been supporting that bearish momentum since the beginning of the week shares a beautiful confluence with our structure that we have there. So let's see how price action plays out. We continue to look out for more selling opportunities, and we also have structures here like the 1976.50, where we shall be looking out for more opportunity to sell the XAUUSD for today. Now, in as much as we continue to look out for selling opportunities, we cannot ignore the potentials of buyers too as well. So in this kind of situation, what do we want to see in this market that will change our buyers from being bearish into bullish at this current structure? I hope you've moved your stop loss. Ensure you lock in your profit right now, and let's look at this current market structure to see what could really happen from this area that will give us an inclination that buyers are gradually stepping up the game. Now, at this point, and using that bearish trend line, this bearish trend line here still remains our yardstick for trading activity, as this line has been a very strong structure that has been supporting that bearish momentum. And if we are going to ever think of buying at this particular point in time, price action will actually need to break out of that structure to give us a clue that the trend line does not have the capacity to continue to hold that bearish momentum. And if I give a visual illustration of what that will look like, we'll want to see something like a breakout of that structure. And in fact, even if a breakout of that level happens, I'm still going to be very doubtful about thinking of buying. And the reason why that is simply because of that $2,007 MAC area. Between the 2007 and the $2,000 level has been a strong selling niche since the beginning of this week, as you can see here. So for me, it's still going to be a very dicey scenario for me to actually think of buying anywhere above that structure. And one thing that could also support a bullish momentum at this point is this is the lowest point price action has been this week. That is the 1969 level. That's the lowest point it has been. And as you can see right now, we have been witnessing some buy pressure resuming just around that 1987. Now, if this continues in such a way that price finds it difficult to break below the previous structure or even break below the 1976, and the buy pressure here leads into the breakout of that structure, then a higher low here will now be a thing to consider to give us that confidence to be part of a bullish momentum. So what I'm simply saying here is, if price action breaks out of this trend line with a higher low here, that is, price was unable to break the previous low, then we could be considering buying that XAUUSD at that point. But another thing I would like to see to give me more confidence to join is price action do some retest of that structure between this trend line and that $2,000 MAC. So I would rather see some couple of rejection where I start seeing buy pressure resume on my lower time frame, that is, sellers finding it difficult to drop back below the $2,000 MAC. Then at this point, I will be considering a bullish momentum at this point. But for me personally, if I could tell you from my own standpoint, I'm doubtful if a bullish momentum will happen here. But if it does happen, we want to get ready for it. So at this point in time, we're in a sell position. I've told us all to secure our current sell position by moving our stop loss to anywhere right above the 1992, and let's see how far this move is going to go. If you have any question, let me know right in the comment section. So with that being said, here I will be moving into the last pair for today, and that is the USDJPY. And on the USDJPY, for the last 24 hours, we have been selling this instrument. And let's run through how the week started for us on the USDJPY. So the week started on a bullish note, though we had some choppy situation happen at the beginning of the week. As you can see here, we had price action trapped within the 133.710 and the 134.200 level. And you all know what we look out for whenever price action is trapped within a flat channel like this. We want to see price action either break out of that structure or breakdown of that level to give us a signal of where price is likely going to be going for the week. And in fact, we saw the breakout of structure, which gave us the opportunity to be part of a 50 pips move before the bearish momentum began here. And then we also had another opportunity here on Wednesday to be part of this bullish momentum. And during our live session yesterday, we acknowledged the fact that sellers are beginning to gain some momentum here, as we saw the sharp rejection of the 135.100 level. And since the breakdown, the retest of that structure, we have seen our price action had consistently found lower highs. And when we connected that series, we had this trend line. Then we also had a temporary demand zone here, which has been holding buy pressure for quite a while. And I told us all yesterday that the only way I will be considering buying here is to see price action break out of that trend line. I want to see some retest of structure for me to be part of that move to the upside. And as you can see here, and unfortunately for the buyers, they were unable to break out, retest the structure. And I told us all yesterday that a breakdown of this trend line here and the temporary demand zone will definitely incite a sell position in this market. And look at what happened. We saw our price action not just only breaking down that demand zone here, but it also broke down the bullish trend line that has been supporting the bullish momentum since the beginning of the week. And in fact, if you had missed that opportunity, the market gave a second chance in the form of a retest of structure here to join that move to the downside. And at this point, for those who have been part of this move, you will currently be running with about 55-56 pips in profit thereabout. And at this point, you know what we do whenever price action moves in our favor. We want to move our stop loss accordingly, lock in some profit here while we continue to monitor price action. And look at what we have. The only area I think we can move our stop loss to at this point is anywhere right above the 134.00 level. So let's lock in some profit here, and let's see how price action is going to be playing out from this current structure. Now that we are going into the new London and the New York session today, what is going to be our plans? What are we expecting to happen in this market? Right now, price action is currently trading at a very critical point in the market. If you recall vividly, at the beginning of the week, the 133.800 level was marked out as our key level for the week, and I told us all how we are going to be using this key level as our yardstick for trading activity. And to make things a little bit clearer, especially for those who are not part of our live session prior to this one, I would like us to scale up a little bit into the daily time frame, where we begin to appreciate the importance of that 133.800 level. Now, right now, we're on the daily time frame, and the importance of the 133.800 level now becomes a little bit clearer. Now, we acknowledge the fact that the 131 level has been a very strong demand zone. As you can see, for the past 9 to 10 months, this level has been a strong buying niche for participants in this market. As every point in time price action comes into that structure, we have been citing buy pressure resume from that level. And on in the month of February, we saw the breakout of this trend line, which actually respected our technical expectation that whenever price action breaks out of a key structure like this, it will come back, retest that structure. As you can see, retest the trend line a couple of times, transitioned into a reversal pattern, and with the sight of that reversal pattern, we identified the neckline of that reversal pattern had the 133.800 level. So that is where the 133.800 level comes in from the structure. So this is our neckline of that reversal pattern. And you all know, for a reversal pattern to become valid and mature, we need a breakout of the neckline of that structure, which actually happened at the beginning of the week as price action moved about 130 pips before we begin to see selling pressure resume during the midweek. Now price action is back at that 133.800 level, making us realize that we are at a critical point in the market right now. So we are the 133.800, a level which is the neckline of our potential reversal pattern. We saw the breakout of that structure at one point at the beginning of the week, and from a technical standpoint, whenever price action breaks out a structure, there is a likelihood that we could have a retest of structure at any point in time to incite a trend continuation to the upside. So these are things that we are going to be looking at when we scale back down into our lower time frame. And if the contrary happens in such a way that price action drops below the 133.800, selling pressure resumes below the structure, then we would have no choice than to be part of a bearish move to the downside, and this would have negated that reversal pattern that we were anticipating earlier. So the most important thing we want to be doing right now is to scale down to the 1 hour time frame. Let's see how price action has been reacting to the 133.800 level since the beginning of today, and that will give us a clue into what to look out for as we prepare for the New York and the UK session. So now let's scale back down to the 1 hour time frame here. So now with the sell position running on our 1 hour time frame, we need to be very, very careful at this particular point in time, as we could have some reversal pattern happen around this area. And for us to be part of a trend continuation to the downside, I would rather wait for price action to do a breakdown of that support line. Remember, that was our support line at the beginning of the week, had the 133.710 level, and that also is very close to our key level at the beginning of the week. So I would want to see price action take out all the buy positions around this area. So price action taking out all the buy positions here, and that would reflect on the chart as a breakdown of structure. But I would not be getting too excited to join a sell position here, so I'm not having a sell stop order below the structure. I want to see a breakdown happen, then look out for confirmations to give me a clue that sellers are actually strong at this point. So I will be scaling down to my lower time frame, like my 5, 10 or 15 minutes time frame. Look out for a retest of structure and multiple rejection, giving me a clue of how strong the sellers are at this particular point in time, as I want to see buyers finding it difficult to climb back above the 133.800 before I want to be joining a decline to the downside here. So at this point, we are at a critical level where I'm of the opinion that a bullish momentum will likely come in from the structure, but if a breakdown happens, then we'll have no choice than to start thinking of how to add more position to our existing trade. And for those who still have a sell position running, I hope you've moved your stop loss. That is what we agreed at the beginning, that we should move our stop loss, lock in some profit, and let's wait out and see how price action will be reacting to the structure, at least in the next couple of hours, to know what our next line of action will be. But be rest assured that I will be with you in the comment section on my public platform, which is scrolling at the bottom of your screen right now, my TradingView platform, and the Telegram platform, where I will be dishing out an update on what to look out for as we continue to monitor price action around this area. And I can see a comment from Ask Amin. I was looking for looking after US tech stock. Can you advise me on this stock as well? Is it a good stock to trade? Well, I've been trading the US stock for a while. You can check my videos. The exclusive what's it called again? Let me show you. Exclusive Forex live studio session. So I normally do this after the session. I normally have a session with Xtrend, and we normally discuss about the US Tech 100. So once 3 hours from now, I will be uploading the videos of the live session I will be taking on in the next 1 hour. So you might want to check that video. I normally deliberate on it. You can even look at our video for yesterday, which is on my public platform. Check it out, and you should be able to have an idea of what we are looking at and how we intend to take advantage of any trading opportunity. And in the next 3 hours too, you will be seeing an upload on my channel. So I hope you have your notification bell on so that you can get an update as soon as I upload this analysis. So check it out there. KMS Kandawatag, I hope I pronounced your name correctly. I'm sorry if I didn't. Hi, how are you doing? I see your comment. Glad to have you around. So I think on this note, we are going to be calling it a day here, and I look forward to seeing you in the comment section on my Trading View and Telegram platform, where I will be giving you an update on what my expectations are as we continue to monitor price action. So do have a wonderful weekend, everyone. I wish you a profitable day ahead, and please ensure that you lock your profits. It's very, very important. As soon as price action moves in our favor, we want to secure that position by locking in the profit. We don't want to get caught up in any situation that where we are already in profit earlier and all of a sudden price moves against us and we lose all the profit we had made. So please lock in your profit, and if the market is going to be giving us a second chance, we will definitely see it. So on this note, I wish you best of luck. Do have a wonderful weekend, everyone. Bye bye.